All right, guys, we're back for another Tactic Tuesday. Sorry I missed last week's New Year's week. Tough week, getting caught up from the holidays. You know how it is. All right, so Tactic Tuesday. So we're going to combine last week's and this week's. We've got 3 topics for you. So the first one I want to go over is if you're doing seminars, and we just picked this up over the, it's been out there for a while, but we just started using it. It's actually called Teleprompter, and it's really good. So to give you a little bit of example of it, it's an app that looks like this here. If I can show it to you. It's that guy there. But it looks like this. I mean, when you are talking to people, like doing a seminar virtually, and it can scroll. Like you can hit a button, it'll do it by itself. Like based on your speed of the speech. But it's pretty cool. It's actually pretty cool. So this is good for anybody who's doing social media. Some of you people are like, Mike, we've been using this for 2-3 years. News, everybody's been using it, but I think it's pretty cool to have it on your phone. And that's something that we picked up with the Mike Fitzpatrick team. All right. So the second thing I want to go over today with Tactic Tuesday is 2 programs that have been out there, but they're making a huge comeback. But they're changing around a little bit, making it lucrative to use these programs. They're both loan programs, okay? The first one is called a HELOC. HELOC stands for Home Equity Line of Credit. So why is this beneficial now? Well, if you purchased a house or refinanced a house since 2020, chances are your interest rates are pretty low, 2.8, 2.9, right? And I guarantee you if you bought in 2020 or 2021, you got a ton of equity in there. So let's say you got 20% equity in there. Let's say you got 40,000. Let's say you got 80,000. Let's say you got $120,000 of equity. Yeah, you're walking around pretty big, right? Right? Well, guess what? That money's not doing anything for you. You're making pennies off of it. So why not take that money and use it for something else? Well, Mike, if I refinance, I'm going to lose my 2.8. No, not with the HELOC. With the HELOC, it creates a separate loan. And some of these HELOCs right now, these programs, there's no interest rate if you qualify for like a year or so. So if you're doing a home repair on the house, like say you need an extra 20,000 and you got 60,000 there, some of these loan programs don't even need an appraisal. You just go in there, tell them how much you want. They look to see what your equity is. You agree to their terms, and boom. So you can either pay this off in 3 months or 3 years, depending on the conditions of the loan. And it's a separate loan. It's a separate payment. So you can still continue making your 2.8% interest rates, but I stress that if you do have any extra money, pay that off because it's a higher interest rate. The second thing you can do with the HELOC, if I have 120,000 into it, maybe all I need is 20% for an investment property. Maybe I'll take 40,000 out. Maybe I'll take 60,000 out. Well, Mike, what's the interest rate on that? Okay, write that down. My question to you is, what does your investment property look like? Is it a duplex? Is it a short condo? What's the rental rate? What are you bringing in? So when you calculate what your rental is going to be, you have your HELOC payment that you just took out of the home equity loan. You're now going to apply for another loan, whether it's a secondary property, a duplex, investment, whatever. Now you're going to calculate it. You're going to say, okay, here's my new mortgage payment over here. This is what I'm getting rent. Oh, wait a minute. Okay, I'm making $300 more than that. So if my mortgage payment's like $1,200 over here, but I'm bringing in $1,500, $1,600, that's $300-$400 more. And then I look over here to see what my monthly payment is, $180. No brainer. You're making more money here than you are just leaving it in the bank. Best part though, this has a time frame. This HELOC can be paid off in 3 months, 3 years, however you want. But once that's gone, guess what? Now it's a solid $300, $400 that you're making off of it. All right, so that's a benefit. Definitely a plus. Look into HELOC if you want more information on that. Right now, the best program that I've seen so far is being handled by Deanne Caceres, the mortgage mom with Green Tree Mortgage at 609-605-7153. And it's called a HELOC. Another program that they offer, well, which is definitely making a comeback, they actually stopped doing it for a while, is the rehab loan. It's also known as a 203K. So let's say you have an issue, okay? Let's say you have an issue that an insurance claim won't cover. Let's say that your homeowner's insurance is going to cover it, but there's going to be a time frame. You might want to do a rehab loan. Or if you're buying a property that needs a lot of repairs, you can do this. The main difference between getting a regular mortgage and a 203K is usually only a 0.5% higher or just a small increment higher. But these are definitely better loans and better interest rates. Rather you buying the house, getting a lower interest rate, and then getting a secondary loan like a regular HELOC or a signature loan that could be at 12% or 13% on some of these signature loans. You definitely want to consider the rehab loan. All right, that's it for today. So, teleprompter app for anybody who does a lot of videos, and it's not just real estate agents, whoever does seminars and Facebook Lives, teleprompter is a good way to go. And the two financial end of it, if you're looking to pull money out, but you got that low interest rate and you don't want to lose it, HELOCs and 203K for any kind of rehab loan. Any questions? Give us a call back. Mike Fitzpatrick, our team, but it's your dream, at 267-549-2505. Talk to you later.